right now is Mahoney Asset Management CEO Ken Mahoney, also joined the conversation all morning long this morning. Fox Business's Dagan McDowell and Strategic Wealth Partners President and CEO Mark Tepper. Great to see everybody this morning. Thank you so much for being here. Ken Mahoney, kicking things off with you. Thanks for joining the conversation. Here we are in the final day of the third quarter. What are your expectations for the fourth quarter in terms of markets and the economy?
So I guess we kind of peel back a little bit. This market really reminds me of 2017, where we had low volatility. I mean, this past summer, we had the volatility index, the VIX, trading at 16 or 17. And like 2017, the biggest drawdown is 4.5%. So I think we're in pretty good shape. I mean, again, you look at the charts and you kind of put it all together, we're above the 200-day moving average, even with this September, as you mentioned. Coming into September, we're pretty hot. 7 months in a row of positive results. Of course, giving quite a bit back in September. But I do think the earnings are going to be setting up really nicely for investors. I have to tell you, sometimes, Maria, we can be really hot into earnings and you get some disappointments, sell the news type of reaction. We're limping into earnings season right here. I do believe the catalyst, the next move higher for this market, is some good earnings guidance, especially guidance into 2022. So I'm actually excited about this little lull we have here in the market because I think it sets us up really well for the fourth quarter.
Yeah, and we'll be getting those third quarter earnings in just about 2 weeks or so, beginning with the banks as usual. Are there areas that you want to be invested in as we move into the third quarter reporting season?
Look, we love technology. We're always in that growth lane, Maria. But I have to tell you, lately this talk about the 10-year Treasury going higher and discount future earnings of technology, we saw that in February, March of this year. I think that correlation, Maria, may be decoupled at some point because, we have a seismic shift that's going on here. People are living and working at home. People are leaving the cities, going to the suburbs, going rural. The demand for technology is only increasing. I mean, this is not a temporary thing like it was when the pandemic first hit. It's become more permanent. You're seeing sales of, that can't keep up with chips, but you're seeing the sales of cameras and printers and phones and all these technology kind of wiring your house up. So I think eventually we're going to decouple that correlation with the 10-year Treasury, higher interest rates, and technology shares go lower when you start seeing this demographic shift that we're seeing.
Yeah, we'll see if this comes up today. Fed Chair Jay Powell back on the Hill this morning after calling inflation frustrating yesterday, saying that the recent congestion in supply chains could lead to longer-lasting inflation than he expected. We've got interest rates pretty flat today. The 10-year hovering right around 1.5%. It's 1.52%, down 1/10 of a basis point. What's your take in terms of the Fed move? Does the tapering begin on November 2nd as they predicted? And does that mean that interest rates start moving higher in 2022?
So I think they should taper. I mean, this is the window right here. We got through the debt ceiling. We'll get through the debt ceiling. I think that put them on pause for a little bit. But you kind of look at the Fed and all they have to do. At the end of the day, rates probably will rise a little bit. Look, the biggest move we've had here is the velocity from 120 to 150. It's the velocity of it. But you think about $120 billion, $80 billion being Treasury bonds, $40 billion being agency, government agency bonds. Who's going to be the net buyer of those $120 billion? So rates are going to go up. And by the way, that's the normal thing. We would like to normalize rates, normalize this economy. So, it's the ebb and flow of everything, Maria. But at the end of the day, it's hard to find out who's going to be that net buyer of $120 billion of buying that's not going to exist anymore.
Well, we'll see about this. All of this you have to lay on top of the president's economic agenda potentially at risk. A standoff among Democrats could force House Speaker Nancy Pelosi to delay the infrastructure vote today. I want to bring Mark Tepper in. The administration says that the $3.5 trillion plan will cost nothing, Mark. Tell me about your expectations for today. I know Biden, you said, Ken, I want to ask him earlier, he said that President Biden was entering the twilight zone if he thinks this package is going to be paid for. Mark, weigh in here.
Yeah, so obviously this is some very fuzzy math on their part because money doesn't grow on trees, especially $3.5 trillion. So look, the way I feel about this is if Nancy Pelosi had the votes, she would have taken the vote already. Instead, she punted until the 11th hour, which is today. So that means she doesn't have the votes for the smaller package, let alone the larger package. If the larger package doesn't go through, in my opinion, that's fantastic for the stock market, because what that's going to do is that's going to lower the likelihood of all those egregious tax hikes. So, I think it's a great thing. We don't want tax rates to go through the roof. So, look, we'll see what happens today, but I'm optimistic as far as the stock market's concerned here.
That was just like the New York Post op-ed today, Ken. Make our day. Try to push it through because you don't have the votes. Ken, what's your take on whether or not this goes through? If it doesn't go through, is that a problem for markets?
Yeah, and getting back to the Twilight Zone, you are living in the Twilight Zone. We all live in the Twilight Zone, complete with Rod Serling. When Jen Psaki says, "Oh, higher taxes. Oh, corporations are not going to pass it on to consumers." Really? And she called that absurd. It's absurd for her to think that. It's like economics 101. Of course, companies' higher energy costs are being passed on consumers as we speak. Higher taxes would as well. So, I mean, for Jen Psaki to say that, you definitely know you're in a Twilight Zone. As far as this, the Democrats over and over have said Republicans are obstructionists, and anything that goes wrong, it's on Trump's watch. You know what? This is Manchin. This is people in the middle saying, wait a second, we're trying to help out the middle class. We really are trying to help them out. $3.5 trillion raises the prices of gas for them, food for them, groceries, everything else. It's not a good thing. Manchin, thankfully, is the adult in the room with this $3.5 trillion, and it's not going to get passed. He's doubled down, quadrupled down. He's not letting go. He's not going to vote for this. They don't have the votes, as Mark said.
Yeah, and it's really pretty disgusting to see what the mobs are doing to these two senators to try to get them to change their vote, protesting outside Manchin's house and threatening to disown Christian cinema. It's absolutely outrageous. Ken, thanks very much for being here and give us your assessment. We'll see you soon. Ken Mahoney joining us this morning. Your morning mover this morning.